All right, hello. Welcome back to the Broken Business Models podcast. We're your hosts, Ryan and James, and today we're going to be talking about one of the more popular EV startups, Lucid Motors. So before we get started into the podcast, let's just start off with a quick disclaimer. Nothing in this podcast or any other materials that we put out should be considered as investment advice. We're just disseminating some of our own opinions based on publicly available information that we've gathered, and you should always consult with a professional before making any investment decision. So with that being said, as I mentioned before, we're going to be talking about Lucid Motors. So Lucid Motors, they have their flagship Lucid Air sedan, starts at $80,000 and goes all the way up to well over $100,000. So obviously they're targeting the luxury EV market. And they've been probably in the public perception behind, of course, the big ones like Tesla, probably one of the more successful EV startups. So a brief history, they've actually been around for a while. They were started in 2007 by a former Tesla executive, but things really started getting going for them in about 2019 when they received a $1 billion investment from the Saudi Arabian Sovereign Investment Fund. So now that the Saudis actually own the majority of the company, but that valuation at $1 billion went up to $12 billion in 2021 when they merged with a SPAC and went public. At that time, they had some pretty lofty projections. Things were pretty optimistic at the company. With that SPAC money, they were planning on doing various things such as increasing their production capacity to a bigger facility in Arizona that they said would be able to accommodate manufacturing of up to 53,000 vehicles per year by the year 2023. So everything seemed to be going really well for the company, and investors could not get enough of it. So right after the SPAC, the stock price surged, and the company actually achieved a market valuation of over $100 billion. So for comparison, that's multiple times more than Ford and GM trade at. And later on in 2021, their valuation peaked at about $125 billion. Unfortunately, over the next couple of years, their optimism did not really show through, and their stock has since declined by about 90%. So what happened between then and now during that 3 years and kind of broke their optimism over the course of especially 2022 and 2023. So I guess I'll hand it over to James. And so James, what happened?
Yeah, so there's a few things that happened that kind of derailed their plans of being the next big EV company. So the first problem was production issues. For example, in 2022, they were originally planning to produce 20,000 cars that year. They had to cut their production guidance twice, first down to 13,000 and then down to 6,500 cars. So basically cut by almost 2/3 how many cars they were going to produce in 2022. And they blamed that on extraordinary supply chain issues. And to be fair, there was a lot of supply chain issues for a lot of EV makers at the time. So it's kind of to be expected that, their ambitious growth plans would be derailed. Now, they have sorted out most of those problems, and their production was increasing kind of in the tail end of 2022. And they ended up producing 7,000 cars that year. So at least they were making progress. But one thing that was really concerning is, first you have to produce the cars, then you have to sell them. And as we were talking about earlier, these are not cheap cars. They start at $80,000 and go up from there. So these are very premium cars, and they have had some trouble selling them. So this chart here, the blue bars are how many cars they produced in that quarter. And then the orange lines are how many deliveries they made. And so for this first line, this Q2 2022, it's actually for the entire first half of 2022. They did not disclose separately which quarter it was. But you can still see in every single quarter, their production was greater than their deliveries. So they've been building up inventory. And if you look at it, this is added up for all of 2022 and the first half of 2023. They produced 11,600 cars, but they only sold 7,000 of them. So 61% of they only sold 61% of the cars they produce. And really what the problem is that the cars are too expensive. So people don't want to buy them. And so we can see this in 2023. They cut the prices of their they cut the base price of the Lucid Air, the cheapest version, by $5,000. I think from $87,000 down to $82,000. So that's all obviously not a good sign when you have to cut your prices. Also, they've had a lot of problems. Earlier they got tens of thousands of reservations, but then when it actually came time for people to pay for the cars, a lot of those people canceled. So they had this massive amount of reservations, but they did not translate into sales at the end of the day. And so people would cancel their reservations, and Lucid was very desperate to try to sell these cars. So we have leaked documents saying that Lucid salespeople, when somebody cancels an order, they would call that customer up to 14 times trying to convince them to buy the car. So when you're having to call someone 14 times, that shows you're really having trouble selling your cars. And then in March of this year, they had to lay off 1,300 employees, which is 18% of their workforce, because they did not have sufficient demand to sell the cars that they produced. So they had to lay off workers because they basically don't need them anymore because the end demand is not there. And one thing that's really interesting, this was a statement that the CEO made on the Q1 earnings call. He said, "We are on track to produce over 10,000 vehicles in 2023. With company-wide initiatives ongoing that will enable Lucid to pivot to higher volumes as market conditions allow." So that's the really key point, is as market conditions allow. So they are planning to make 10,000 vehicles in 2023. Remember that they originally said back a few years ago that they would expand production to 50,000. And now they're only making 10,000 and they can't even sell them. So they're not increasing production anymore. So the market is too saturated with high-end EVs, and no one is willing to pay such high prices for these cars. So this is basically a complete disaster. And, when you think about the valuation and even think about absorbing their fixed costs, for this company to be successful, they're going to have to make 50, 100, 200,000 cars a year. But they're only making 10,000 and they can't even sell them. So this has been a complete failure of a business. But with that being said, it still has a $13 billion market cap, almost $14 billion. So why are investors still hopeful about this? And I think a really important part of the story to understand is the involvement of Saudi Arabia. So the Saudi Sovereign Wealth Fund has invested billions and billions of dollars into Lucid. They own 60% of the company. And from the Saudi perspective, it's not just about making money. They're not a regular investor like you or me. They have kind of bigger strategic priorities. And it all comes down to the Saudi Vision 2030 plan. So as you probably know, Saudi Arabia is a major oil exporter. And historically, their economy has been almost entirely dependent on oil. And then so a few years ago, they made this Saudi Vision 2030, where they plan to diversify the economy away from oil and towards other sectors. And one of the sectors they decided on was electric vehicles. And so that is why they made the investment into Lucid. It was all part of their broader plan for Vision 2030. And this has culminated in Lucid is building a factory in Saudi Arabia. So this is obviously good for the Vision 2030 plan, because this is going to create jobs in Saudi Arabia and create some industry there to help them diversify away from oil. The problem is it's extremely inefficient from a financial perspective, because what they're doing is they're producing most of the components, all of the components of the car at their factory in Arizona. So the car, basically 90% of the work has been done. They ship that over to Saudi Arabia, and the final assembly is done in Saudi Arabia. So that way they can at least have some production in Saudi Arabia and, increase their industrial base a little bit. Even though, I mean, from a financial perspective, it doesn't make sense. Ship it halfway across the world just to do the finishing touches of it. But that really goes to show for the Saudis, it's not really a financial investment. It's a strategic investment meant for sort of their broader economic aims. So what does this mean for minority investors? The other 40% of investors who are not the Saudi shareholders of Lucid, who are not the Saudi sovereign wealth fund. Well, there's been a lot of speculation that PIF, which is the Public Investment Fund of Saudi Arabia, might take Lucid private. And then maybe the thinking from a lot of Lucid shareholders is, okay, maybe Lucid's not doing that well operationally or financially, but if the Saudis are going to buy us out for a big premium, it could still be worth holding the stock. But what you have to understand is that these are purely rumors. The Saudis have not said anything or not had any indication that they have any plans to take Lucid private. And I personally think that it is extremely unlikely that the Saudis would take Lucid private. So you have to think of it from the Saudi perspective. Saudi already owns 60% of Lucid's shares. They already can control what Lucid does. So if the Saudis tell Lucid, hey, you have to build a factory in Saudi Arabia, Lucid does it because the Saudis own Lucid. So they already have complete control. They don't really gain anything by taking the company private. Also, the market cap is $14 billion. So the Saudis own 60%, the minority shareholders own 40%. 40% of $14 billion is $5.5 billion. So that's a lot of money. Not only that, if the Saudis were to take it private, they would need to pay a premium such that the minority shareholders agree to the transaction. So they'd probably need a premium of at least 20% above the current share price, which would cost them, say, $6.5 billion. And the Saudis have a lot of money, but they don't have infinite money. And $6.5 billion is still a lot. And they really gain nothing from it. Because if they if they spent $6.5 billion to buy out the minority investors, well, none of that money would go to Lucid. Lucid itself still needs money. So the Saudis are much better off if they really care about, their Vision 2030. They'd be much better off just injecting that $6.5 billion directly into Lucid and buying new shares from Lucid itself, as opposed to buying out the minority shareholders. So I don't see any benefit of them taking the company private. And kind of as we described, they're having huge problems selling the cars that they produce. The business has basically been a complete failure. And if your only hope is that the Saudis will come and buy you out for a premium, this is not investing advice, but I personally don't think that's a good strategy.
So is this situation unique to Lucid? Like, if you think about Tesla, all the other EV makers are also having trouble selling their cars, right? And incurring price reductions and stuff like that. So, like, compared to like Tesla and Rivian or some of the other larger EV makers, like, are they also facing the same thing, or are they as expensive on a like per delivery basis as Lucid is?
Well, one thing I would say is that the entire EV industry is, been facing some headwinds over the past 6 months or so with increased competition, oversupply of EVs, which is creating price cuts. But compare it to Tesla. So just think about the Tesla Gigafactory, right? You have this massive Gigafactory that produces tens or hundreds of thousands of cars a year. And so you have a massive fixed cost of building and operating this factory, but you're producing such a huge number of cars that your cost per car is quite low. Now, Lucid also built what is basically a gigafactory in Arizona. It's not as big as the Tesla gigafactory, but it's still massive. Has capacity for 50,000 cars a year. but they're only producing 10,000. So it's only at 20% capacity. So if you take those fixed costs of the Gigafactory and divide it amongst a much smaller number of cars, only 10,000 for Lucid, your cost per car is way higher. So some of the other ones like Tesla, they are able to produce cars much more cheaply because their volume is so high, while Lucid is spending huge amounts of money. They're selling the cars, the cars they can sell for 80,000, they're still losing money. They still have negative gross profit. So for a subscale EV maker in this environment is very tough.
Yeah, and if we compare it to like Rivian, for example, I think they make similar price point cars, like different styles of cars, right? I think Rivian is much more focused on like the outdoors and trucks and stuff like that, whereas Lucid is trying to be like a postmodern luxury vehicle maker, competing with things like Mercedes more so. So that's one difference. But if you look at the valuations, like Rivian is producing, at least recently, is producing way more cars than Lucid, right? Mm-hmm. And the market caps are about similar, but Rivian has a bunch of cash as well, whereas Lucid is almost like on the brink of running out of cash until the Saudis put more money into the company.
Yeah, right? So I think if you're going to compare to Rivian specifically, so Rivian now has a market cap of $19 billion, and they are planning to, their guidance is to deliver 50,000 cars this year, which seems achievable based on how they've ramped in the first half. So they're producing about 5 times as many cars as Lucid. And at least from what I've seen, they're having a much easier time actually selling the cars, delivering them to customers. And so they have a $19 billion market cap. But they also have $10 billion of net cash because they raised so much money from the IPO and they still have most of it. So if you subtract the 10 billion of net cash, their enterprise value is only $9 billion. Now Lucid has a $14 billion market cap, a little less, and then they have about 2.5 billion of net cash. So they have an enterprise value of about 11 billion. So Lucid actually has a higher enterprise value than Rivian, but by all accounts, Rivian is executing much better than Lucid is, and that kind of goes to the point where I think the only hope for Lucid is that they can get taken private by Saudi Arabia, which for the reasons we talked about earlier, I think is extremely unlikely.
There is another factor that could kind of be a tailwind to Lucid theoretically, right? In that they're really going for the luxury market, which could have higher margins potentially, right? Like if you look at like Mercedes or Ferrari or Aston Martin, like these like luxury car makers can have higher multiples than like a GM or Ford, right?
Yeah, but to have a price to earnings multiple, you first have to have earnings, which they don't have, and it doesn't look like they'll have anytime soon. Because I mean, if you pull up the numbers, so this is revenue. Revenue actually peaked in the fourth quarter of 2023. That's also when their deliveries peaked, and then their deliveries started going down because of, as the CEO called it, the market conditions. People don't want to buy the cars; they're too expensive. So their revenue has actually been going down since Q4, and even at their peak in Q4, they had 257 million of revenue, but their cost of revenue was 615 million. So they had a massive negative gross profit. They always have a massive negative gross profit, and that's back to the point where, to be profitable as an automaker, you need your factories to be operating at a very high rate of utilization to absorb the massive fixed costs of the factory. And when they're
not have to ship your cars half done from Arizona to Saudi Arabia.
Yeah. Well, that actually hasn't started yet. That's going to start later this year, so it'll probably get even worse once that happens. So the point is, like, it's just a failed business. Like it's not going to work. Like they need, if they want to become profitable, they have to massively increase their volume, but they can't even sell 10,000 cars. How are they going to sell 50,000?
Yeah, and the fact that they've kind of positioned themselves as being a really luxury, like the next generation of competing with like Mercedes and BMW and Audi, right? Like I feel like the opportunity for them to do a pivot like Tesla, where Tesla started off with like the really high end cars and then gradually went down to more affordable Model 3 and Model Y. Like it seems like Lucid is trying to differentiate themselves from the mass market, and so that's just going to make it harder for them to increase their production into the hundreds of thousands per year if they want to sell those cars.
Yeah. So I think it's a very challenging situation. So I think unless you have anything else to add, Ryan, that about wraps it up for what we had to talk about. Um, we would love to hear all of your thoughts in the comment section below. What do you think about Lucid? Do you think there's any part of the story that we're missing? We'd love to hear in the comment section below.